Good Sunday evening, option traders and stock traders. This is Sam the Trader Geek with your Sunday weekly review and preview for October 20th, 2024. Hope you're having had a great weekend, and we're looking at Friday's action. And we saw a pretty good positive day end to the week, and also a pretty positive week overall, a six up week in a row. Everything was in the green. Small caps down just a fraction of a percent, and the VIX was down about 5%. So overall, capping off a pretty good week. Didn't move a lot, but essentially made it for 6 weeks in a row positive. All sectors except energy were up on the day, albeit financials were barely up on the day. And communication services on the back of Netflix earnings were up 0.75%, with real estate close up 0.7%. On the bond market, yields were down across the board, if ever so slightly. Bonds, yields down, bond prices up. So TLT was up 7 cents, but still struggling around that 94 level for the TLT. The US dollar losing a little bit of ground, about 0.25%. Everything, if metals is your middle name, then you are up, and that's been the story with commodities as far as being up. The metals are doing well, and everything else is not so well. Oil giving back 1.71%, still above that 70 level. Nat gas reverting to its losing ways again. Gasoline down, corn. Commodities overall were down on the day on Friday. Cryptocurrencies, on the other hand, were pretty positive. Bitcoin knocking on the door of 70,000. Seems like it wants to break out. I've heard October referred to as Uptober for Bitcoin. We shall see. So far, it's holding its own, and the rest of the cryptocurrency space was pretty positive. Taking a look at industries on Friday, gold miners had up 4%, along with China regaining some ground at 4.5%. Kind of a mixed bag, but more green than red in here. Not much up more than 1%. Home builders up 1.2%. Internet stocks up 1.1%. Metal and mining to go along with the gold miners up 1.4%, and slight red. But overall, on the week, you can see that gold miners were really strong on the week, whereas China lost 7% ground, and solar can't get out of its own way, down 5%, along with the energy complex, as we said. Semiconductors on the back of ASML's pre-announcement or earnings announcement, down 2%. Couldn't kind of rescue even though we had positive results from NVIDIA in terms of performance, couldn't get the semiconductors positive on the week. So gold miners leading the way last week. And then on a one trading month, a 20-day basis, you can see cryptocurrency stocks are doing well, but China still in the lead. Metals and mining doing very well, and solar, no big surprise, taking the brunt of the downside. And surprisingly, cannabis over the last month has been strong. So who knows what that's saying about the election. And then 50 days, China still the strongest, along with gold miners and cryptocurrency stocks and home builders. So a lot of double-digit changes over the last 50 days. But you can see a lot of green here in the breadth chart. So it's a bull market after all, and there's not a lot to say in terms of weakness. Its breadth has been very strong, and this is nothing to complain about. We look at the exposure of the National Association of Active Investment Managers, pulling back about 9% in terms of their net long exposure. These guys can get more than 100% long if they get leveraged, and surprisingly, they pulled back about 8.6% on their exposure. Little bit of weakness the week before, but something tells me that this is going to go right back up after the week we had. And unless we get the seasonal weakness called for over the next couple of weeks, I think the chase is on into year end. So let's take a look at the week that was, so to speak, and see where we're at and do our kind of overall review. Small cap indices, the winners last week, the smaller, the better, so to speak. And the small caps, mid caps, micro caps are all trying to break out, and everything in a green on a year-to-date basis. On a quarterly basis, everything is green. I don't see any red here, so strong market all across the board, across all sizes and shapes, so to speak, for the year. Breaking down into the sectors, utilities taking the lead last week and the lead overall year to date, 29%. Who'd have thunk it, huh? And real estate doing well along with financials and energy and healthcare, the sole two sectors of the 11 that were red on the week. And we can see a lot of green here on a monthly and quarterly basis. So getting a good start to the quarter. And after utilities, of course, financials are strong, communications are strong, helped a lot by Netflix last week, to industrials. And, who would have thought that technology is not even in the top three, but up 20%, no slouch, respectable. But good to see all sectors are in the green for the year, and the ones for the quarter that are not are just slightly so. Looking at industries, you've got a lot of strength in the gold mines. They say airlines had a really good week. And let me see if I can get this thing out of my way. Cannabis, strong. Brokers maintaining their strength, up 27.6%. It's uncanny how strong the brokers are this year. And this quarter, specifically, the banks are strong. And most everything on a yearly basis is pretty good. But there it is, alternative energy and solar, two worst performing industries year to date. And so if someone's saying that alternative energy and solar are going to take over the world, well, certainly the stocks are not saying so. And oil services is also not saying that oil is going to be running with a ball either. You got oil and gas exploration down 1.49% on the year-to-date basis. So energy not showing the strength and that you would expect given the weakness in the alternative energies. But lots of strength in the quarter. Weakness last week in oil services, solar, as we saw, oil and gas, healthcare, and semiconductors. Factor-wise, this is where you look at what was emphasized during the year or during the week, what have you. And so when you look at the rotation, it really favored higher dividends, lower volatility stocks last week, kind of the opposite of what we've seen lately. It's risk on, but not as much of a risk on as doing tech and financials and what have you, industrials. But still, we can see that growth is heavily in favor, 29 or 30% essentially up for the year, and quality 24%. But look at momentum, still up 44%, kind of the runaway winner. But of course, momentum cuts both ways. When that goes away, it can turn on you fast. So you got to be careful there. Here are the commodities. Uranium being kind of the top dog last week. And mostly the strength was in the metals. Anything that was not metals, other than copper, which was down 2% last week, but still up 14% on the week. Everything was kind of weak, and especially in the agricultural complex. Lithium, after a strong week the week prior, giving back 4.5%. Gasoline down, nat gas, anything in the energy complex was just killed last week. So if you're not uranium, if you're not precious metals, you're not doing too well. And really mixed bag year to date on these commodities. I thought agriculture was going to be doing a lot better this year, but it has shown some weakness. I'm not sure what that means. Corns and soybeans down, around 20%, wheat down 14%. Nat gas is the runaway loser for the year. And of course, gold being the big winner so far this year, and no signs of abating on that trade. Size versus value. You have mostly value taking the cake last week, up 2.64%, small cap, mid cap, large cap, all in the top ranks. But still, large cap growth is a leader on the year, with mid cap growth in second place, small and large cap value taking over the baton here, with mid cap value and small cap growth being tied. So strength everywhere, green all around, can't complain about that. Bitcoin or cryptocurrencies, green all around. Bitcoin showing the most strength, up 62% year to date. Bitcoin Cash up 44%, and Ethereum 14%. So one of the strongest trades this year has been in the cryptocurrency. So you can't deny that. And strength in the cryptocurrency tends to beget strength in the market, and vice versa. So these are the cryptocurrency and the stock trades are risk on. Looking at the Mag 7, Apple and Nvidia leading the way last week, with Meta taking a rest, well deserved, after still up 63% on the year, but nobody's touching Nvidia, of course, up 178%. Amazon, no slouch, up 24% on the year, even beating Apple year-to-date basis. But Tesla just fits and starts, can't seem to get going and keep going, down 11% on the year. So, and Microsoft kind of the lowest of the green ones on a year-to-date basis. So it's consolidating, and all of these kind of deserve a break since they've been outperforming. Looking at top 10 winners and top 10 losers, you'll notice no real stock names here that were really stellar performers, but Bitcoin Cash up 12%, Litecoin 12%, uranium up 11.5%, Bitcoin 9.42%, and actually these are the ETFs. I apologize, that were up this week, with natty gas being the worst, and USO, crude oil and energy, being the worst, along with solar and lithium. So it's kind of what we saw in the different charts. But I also want to give credit where credit is due. These charts are put together by Charles Kirk of the Kirk Report. So he puts them together, and I kind of present them to you. So let's take a look at what's happening in the markets. And as I like to do, I'd like to start with the SPX and kind of do a top-down approach to what we're seeing. And it's always good to zoom out and then zoom in, because that kind of keeps you in perspective, because we tend to focus as traders on the smaller time frames. SPX, monthly chart, monthly candles. I mean, you couldn't ask for anything more perfect. 6 up months in a row, strong MACD, no signs of reversing. And of course, this is the longest time frame, so it's the slowest time frame, so to speak, in terms of seeing a reversal. Still overbought quite on the RSI, and ATR is just middling. So monthly, nothing here to complain about. Take a look at the weekly, and here we are at the top of the Bollinger Band, 6 weeks up in a row, hitting an all-time high this week. MACD is positive. RSI hugging the 70 line, and ATR on the decline as volatility declines. So exactly what we like to see. And we've kind of have 5 weeks riding the Bollinger Band. So not sure. If we look a little closer at the daily chart now, we hit an all-time high on Thursday, and then kind of a doji on Friday. And it just seems like anytime we get above the Bollinger Band, we tend to pull back right back in. So we've got a MACD that's positive, but not strongly so. Nothing to complain about here. RSI at 65, so it's not overheated. And the ATR bottoming out here as the volatility comes in. If we add drawings here, and I know it makes it a little bit messy, let's take a look at what we have here. We've got an implied move. 69 points is the plus or minus 69 points is the weekly expected move for the SPX. And we tend to go migrate or float up to it or down to the lower edge of the expected move. So I like these as kind of bumpers for the market. And once they get beyond those, dynamic hedging kicks in either at the upside or the downside and tends to exasperate any move. So 69 point move, lower than last week's 83-point move. But while we have a lot of earnings this week, we don't have a lot of heavy economic reports. I think that even though the last 4 weeks we've closed inside the expected move, I think odds favor moving outside the expected move for this week. We do have a cup and handle target here at 5,900. No reason why we can't get there. You're seeing targets on the street. Goldman Sachs giving a 62.70 target for the SPX by year end. And there are plays in motion that could transport the SPX up to 64.15. So if you're short, you're wrong. And I feel bad for you, but it's never too late to switch positions because you're going to lose money being short in this market. And pullbacks are being bought. The chase is on by portfolio managers. Taking a look at the NDX, starting out with the monthly, again, not as attractive as the SPX, but still positive, 3 months up in a row, and solid MACD, overbought on the monthly. Looking at the weekly chart, again, 5 weeks up, kind of a doji for last week. Nothing to complain about here. Still has not made its all-time high, but MACD kind of coming back and reversing with the fast line over the signal line, and momentum looking like it wants to shift. So if anything, maybe we target that all-time high here on the weekly parameter. We go to the daily. Kind of a mixed bag last week. We really didn't go anywhere. We opened up on Monday, went down on Tuesday, kind of a doji on Wednesday, up and kind of gapping crapped on Thursday, and then Friday it's kind of positive colos. Looks like the MACD is trying to reverse down, but it really is kind of undecided here. There's no real edge in here, but for the week we have about a 319-point move, expected move on the NASDAQ. And if it's going to play catch up, then hopefully it'll help drag the rest of the market along. And then finally, I want to talk about the Russell, which has been strong of late. And here we go. Bring this also to a monthly chart. Let me take these drawings off to kind of clean it up a bit. So here are the monthly candles. Strong MACD. Not overbought on the monthly time frame, not as attractive as the NDX or the especially the SPX, but I mean this could get going if it takes out this 2320 level. And I'm using the Russell futures as my proxy. I could use the RUT, I could use the IWM, but they all say the same things here. I just happen to follow the RUT more than anything. But if we can get above this 2320 level, this July, August high, we could be off to the races. Let's take a look at the weekly, and whoops, went to the daily accidentally, and nothing really going here. We're 2 weeks up in a row. See if we can continue. MACD is positive, not overbought too much on the RSI, and then average to range declining. So much improved in the small caps. And here we go. This little candle is today's futures. I guess we're up about 6 points. And overall, the futures this evening are up slightly. SPX or the ES futures are up about 9 points, with the NASDAQ futures up about 30 points at around 8 o'clock Eastern time. And we can see here we had 4 strong days, and then we started doing a little bull flag here. Let's see if that continues. And if I add my drawings back here, see if I can glean anything. Here's our upper edge of the expected move. I think we have about 42 points expected in the small caps futures. So that's takes us up to 23.29, or down here to 22.55. And finally, let's take a look at the volatility chart, which if you're long volatility, you're wrong. You can see here we were stuck around the 20 level and finally faded on Wednesday, Thursday, and Friday to get us down to 18.03. So volatility is fading on a weekly basis. We kind of topped out at the upper Bollinger Band and came right in, and momentum is turning negative on volatility. But the fat lady hasn't sung just yet. We have negative seasonality coming up over the next couple of weeks, so to speak. Let's take a look at, we said the SPX has a 69-point move this week. Taking a look at the VIX, we'll go to the next monthly expiration, which is on November 20th, post-election. We were at 18. And what I like to do is look at the $1 out of the money on both the calls and the puts and compare the prices. So if we go to the 19s, average price is about, let's say $1.73 for the calls, and then go $1 out of the money to the 17 puts, and those are pricing at about $1.14. So obviously the calls are slightly more expensive than puts, but it's not multiples of the price. But let's take a look at one more here and go out to December expiration. You can see that the 19 calls are pricing in at about $2.19, and then the 17 calls pricing out at let's call it $1.82. So again, calls are still more expensive, but not more so. So we're not able to glean a whole lot of information from the pricing of the options, but it is telling me that the odds are favoring somewhat of a pullback here, but not conclusive at all in terms of what the options are telling us. If we take a look here at what's coming up in terms of economic reports this week, lots of Fed heads speaking, nothing other than leading indicators on the calendar for tomorrow at 10 a.m. Kashkari, Schmidt talking, Richmond Fed on Tuesday, existing home sales on Wednesday, Beige Book on Tuesday. How exciting. Jobless claims, of course, our weekly jobless claims with new home sales on Thursday, and Kansas City Fed at about 11 o'clock, and durable goods on Friday with consumer sentiment. So not a heavy economic calendar, but if you want heavy, here's your earnings calendar for next week. We start to pick up. You can see here that the week of the 20th has a big pickup in earnings, but next week it's even more so. And then the first week of November is where we peak with earnings. And so a lot of well-known names this week: Verizon, GE Aerospace, Nucor tomorrow, and 3M, Enphase, Texas Instruments, Baker Hughes, Coca-Cola, Tesla, obviously more important one, IBM, which has been on a tear, Boeing, which apparently just settled their strike over this weekend. We'll see how that reacts. It should give a boost to the Dow tomorrow. General Dynamics and Lam Research and ServiceNow over here. Honeywell on Thursday, Dow, Western Digital, and Capital One on Thursday. And then Colgate-Palmolive on Friday. Not much going on. Centene and AutoNation. So heavy earnings calendar starting up. We're getting into the heart of earnings season. So far, earnings reactions have been pretty good. If you saw Netflix and ISRG, Intuitive Surgical, pretty good reactions to their very good earnings last week. Finally, here's kind of a seasonality chart, and this doesn't really take into account election years. And we're right here about the 15th of the month. We do tend to see a little bit of volatility, a little bit of a pullback, and then a run into kind of the 20th. Well, here's I guess this is trading day. So we're at trading day 15. So by trading day 21, we peak out and we have an election. And quite honestly, seasonality has not worked over the past few weeks. September was supposed to be weak. It was not. October should have started out weak. It did not. So when weakness doesn't appear when it's expected, that's a strong bull market. And what I can say is that you can play the game. It's been so strong and everybody's on the bull train. And so we're probably going to get a pullback, and we might. But, you know, we are above the 8 EMA. We're above the 21 EMA. There's no signs of reversals. We have bullish plays in motion. So be careful out there. Betting short is not the way to go. And if you are going to get short, make sure it's for a short time, because this market is strong, and it'll take your money if you're trying to bet against it. Hope you enjoyed this video, found it useful. You can find me on Twitter at Trader Geek. Give me a follow, or Trader Geek Sam in the forum, and I'm happy to answer any questions you have. Have a great rest of your weekend, and thanks for watching. Bye-bye.